Okay, there we go. We have the sound. I guess I need to throw that whole preamble out once again. Holy banana bread. All right. Um, guys, welcome to this week. What a week it has been. This is great. I love these Sunday streams. This is actually our second stream. We did a stream earlier today. We actually and having fun. We looked at Charles Dickens' A Christmas Carol and some of the financial lessons that we can pull out of that book or movie. Some people don't have the attention span to read a book nowadays, so the movie is a fine. So that was a lot of fun. That was a lot of fun. But now we're here for the news, all of that fun stuff. One piece of news that is not in the news yet, or at least not in my news, is MicroStrategy, guys. They are being added to the NASDAQ. They will officially be added to the NASDAQ 100 on the 23rd. Now, what that means is a lot of ETF, particularly the QQ ones. In fact, one of the biggest NASDAQ ETF is named QQQ. They're going to be buying MicroStrategy. So MicroStrategy is going to get a bit of selling pressure from that. So they may have an interesting week. It's going to be fun to watch. It will absolutely be fun to watch. So hopefully, guys, I still see the sound there. Let me know if you can hear me right now, because everything says you should. Everything says you should. If you can't, that's a problem. That's a problem. And we'll get that fixed right away if that's still the case. But in the meantime, I'm going to keep talking as though you can hear me. It's going to be fun. It'll be fun. All right. Okay. All right, good. You guys can hear. Perfect. Oh boy. That's good to know. That's good to know. I'm going to mention very quickly, I'm going to mention our good old buddies over at Blossom. So if you guys have not heard about Blossom, that is the social media app that is designed and run by investors for investors. It's pretty cool. You can sign into the app. You can or you cannot. It's up to you. Connect your portfolio. There's all kinds of fun stuff, but most of it is all talk about finances. It's a fun place to be. I'm over there. If you want to try it out, come on over. There's a link down below. Follow me. I'll follow you back. Message me if you got questions over there as well. I don't mind. I seem to live. I seem to live to answer questions. So nothing wrong with that. All right. We are past the halfway mark. So we're past the halfway mark on the financial Blogmas event. That's running until the 24th. So there will be a video out every day. I did mention to you guys earlier, but I think the sound was off. I'll mention it again. We did one today earlier, and we actually, on the weekend, we tend to try to have fun. So I pick a fun topic. Today, we actually talked about A Christmas Carol by Charles Dickens and some of the financial lessons that book kind of teaches. Whether you can, most of them are inferred lessons. If you go literally, some of the lessons may not be the best, but nonetheless, we'll continue. All right, guys, let's very quickly catch up here with the chat. I know we're going to start with Jonathan. Is anybody late? Now, he's in reference to the earlier stream today. I was 5 minutes late. Well, technically not, because I did set the expectation that for the financial Blogmas, when I say 1 o'clock it starts, it means just after 5 minutes. It's just put a 5-minute window for setup and stuff. So not technically late, but kind of late. So we'll let you have that. All right, here are the sounds as I as I pulled off the sound issue. All right, let's see here. We got JJ in the house. Good to see you, JJ. Jackie is in the house. All right, we're all good. Everyone can hear loud and clear. JJ says, hope everyone is enjoying the chilly but winter day. Minus 15 in Montreal plus wind chills. I think it's pretty darn cold here too. Now Tuesday, I do have to get out and about on Tuesday. So that is something I am hoping it warms up. According to the Weather Network, it's supposed to, but we're going to see. We're going to see. Jersky says minus 15 is not a bad day here. Perhaps not. Perhaps not. All right. Kevin says, hey, do you take on clients to manage their money? No, I do not take on clients to manage their money. I do. I do take on. I do one-on-one consultations for basically learning financial stuff and giving you the tools to manage your own money. But I don't directly manage anyone's money. That's kind of frowned down upon. That's kind of frowned down upon by the law. By the law. King of Day says, hello, everyone. Oh, good to see you, King of Day. Good to see you. Oh, guys. So we're not that far away. Friday night, we're having our 5,000 sub celebration. So it's going to be fantastic. Now, this will be my opportunity to ask you guys questions because we're doing it kind of in the format of a quiz show type thing. And we're going to tally up all the results through the stream, and there will be a prize. So whoever comes in first place, they get an hour of my time. So, if you want me to look at your portfolio, or if you want me to, teach you something, or help you understand some concept or whatever, or heck, even if you don't want any of that and you just want just want to sit back and say, let's just have a good old conversation for an hour. It's all up to you. So we got that all planned. That's coming up on Friday night. Whoever wins, I'm not going to award my hour until pretty much I'm thinking January. Just because this month is my busiest month of the year with the financial Blogmas. But we'll negotiate. There might be a little bit of leeway, but probably not a lot. So just something to keep in mind. All right. So with that all being said, I think it's time. For us to actually jump into our first news story as we bring in our Tiff Macklem Beaver. So on Wednesday, the Bank of Canada, they did drop another 50 basis points. That brings the overnight rate right all the way back down to 3.25%. So the last time, and this is interesting, the last time we had 250 basis point cuts in a row was back in 2009. That was right after the financial crisis, as we were trying to get that all, trying to get the economy back on track, let's just say. Now that does also exclude the pandemic, because there was big cutting at the initial part of the pandemic, but you can't really count that in your financial data because it's absolutely 100% an aberration. Now, the driving factors for this larger cut, of course, we had weaker than expected GDP, and we had higher than expected unemployment numbers. So between the two of them, the government, well, not even the government, the Bank of Canada is basically like, all right, let's throw another 50 basis points at the wall, see if we can stimulate this economy a little bit. Now, there are some economists out there that are not liking it. They're concerned. They're saying that this is going to be bad for the dollar. And that's a possibility. That is a possibility because right now the loonie is already struggling against the US dollar. And even though we have a bit of a buffer, when it comes to our rate versus the American rate, but we keep moving further away. And that buffer's only so big. So I think we're probably just outside of it. It's going to be very, very interesting. Now, what is interesting as well is in the speech that came after that rate cut, Tiff Macklem did signal that the Bank of Canada is going to be taking it much slower in the new year. So we're probably going to see some 25-point rate cuts. And maybe, just maybe, there could even be a pause in there, even if it's sort of like, cut 25 every other meeting. I think for now, the first rate meeting in 2025 will probably be a 25 pointer, but we'll, of course, evaluate that more as we get more data. Obviously, if the economy starts to really spiral and unemployment keeps going up, that's going to put a lot of pressure. That will definitely put a lot of pressure on them. So we got a lot to sort of look at as we move forward with with those rate cuts and the impact that they're going to have on, of course, the economy. JJ says, "I'll win for sure." We see, JJ. Here's this thing. I actually was thinking about this. If you want to partake in the contest, and I know everybody said you could, you can't be on the air. And I'll tell you why. Because I know that you wanted to also come on the stream. Because you would get the answer, you would get the questions faster. Because you would basically you'd be real timing me while everybody else would have a delay. So, not to say you can't come on the air. I'm just saying that while you're on the air, it's unfair for you to have an unfair advantage. So any answers during the time you're on the air wouldn't count. That's yeah, I was thinking about that this morning, and I was just like, oh yeah, that's right. So because I definitely want it to be 100% fair for everybody. So we'll figure it out. You and I will talk. We'll talk. Balik is in the house with a hey all. JJ says, yeah, I think you see the logic. You see the logic. And then I'll limit my answers to chat only. All right. Paul is in the house with a better late than never. Good afternoon. But I'll be on the air for the vibes. Yeah, sure. Absolutely. We'll figure things out. Like quite literally on Friday night, anybody who wants to come on the air, because it's a celebration video, you're more than welcome. Heck, I've got room for 9. I think I can host up to 9 people in addition to myself. Yeah. If you guys want to come on the air, you're more than welcome. It's a celebration. We're gonna have some fun. But if you do come on the air, any questions asked while you're on the air, you won't be able to answer those ones. So if you're losing really bad, you're like, yeah, I'm not going to win, then definitely feel free. It's up to you guys. I'm happy whether anybody comes on the air or nobody comes on the air. That's kind of the way it goes. All right. Lisa is in the house. I love it. With a hi, everyone. All right. Whoops. Paul says, let's see. StreamYard shows the emoticons. Nice. I do see emoticons. Yeah. Oh, I see the happy faces. So I'm pretty good with that. All right, guys. We got more news. So let's see here. What is our next story? We got a postal strike update. So we do have an update to the good old postal strike. So, of course, the postal strike's been going on for about a month. And there has been no headway between both sides. So as a result, on Friday, our labor minister, so Stephen McKinnon, he announced that he is asking the Canada Industrial Relations Board, so they're the CIRB, in order to get workers back on the job. So he wants them to order them back, provided, and this is kind of that caveat, provided that provided they see it as an impasse as well. Now, there's an interesting thing here. I'll tell you it in a moment. So if, of course, the CIRB agrees, then the Labor Relations Board would order Canada Post and all employees represented by the Canadian Union of Postal Workers to resume operations and extend the terms of the existing collective agreements until May of 2025. So basically, it's kicking the can down the road. In a nutshell, it is kicking the can down the road, but that's kind of where we're at. Now, the Canadian Union of Postal Workers, so the CUPW, they're not happy. They released a statement saying it denounces in the strongest terms this assault on our constitutionally protected right to collectively bargain and to strike. holy banana bread. It kind of does. Now, a really, really interesting thing, and this is something that I was watching an interview with Jagmeet Singh the other day, actually today, this morning, not really the other day, it was today, and he said that the NDP are prepared to vote out the government in non-confidence over a any kind of back to work legislation. And he says that's one of the reasons that the government has been doing these different ways to get people back to work. So, for example, what they're doing with Canada Post, it avoids it going into the legislation. It avoids basically a vote on it, which would be considered a non-confidence vote. Because he said he would vote for a non-confidence in that situation because they're very, very adamant that the liberal government shouldn't be interfering in work order. So that's kind of interesting that he's been doing it this way, and that's one of the reasons that you're not seeing this binding arbitration in this case because they don't want it to go before the House, And I have a feeling, like I still think election-wise, we're going to be looking at an election in the spring. I'm still pretty adamant on that. But it was interesting. It's interesting that this is happening. But the good news is that if they do go back to work, even though it's not ideal, even though it would be nice for them to have a contract, it will at least start opening things up, especially for people in remote communities. Having access to the mail again would be really, really good. So this is, of course, an ongoing story. So we'll have to see what. I haven't heard anything. I haven't heard the board actually rule on anything yet. But if all goes well, we could have postal delivery by by the end of the week coming up. So that could be really, really interesting. Niece is in the house with a let's see, late as usual, but hey to you all. Okay, fantastic. It's funny, when I first glanced at this comment, when I was still reading the news off, I was like, I read latte. I don't know why. I saw latte instead of late, so I thought that was kind of a funny. All right, Vic is here. 30 here and 12 likes. Come on, folks. Where's your Christmas spirit? Give to charity and hit the like button. Yeah, exactly. I guess Vic is the new Mary, so I'll have a sip of coffee while you guys are hitting that like button. Now that I can't see how many likes I have on the fly, it's like I keep forgetting. I always forget to ask people to hit that darn button. Oh, so good. All right, we have a Vineet in the house with a hi all. And Vic says, good to start Christmas shopping on December 23rd or 24th. Oh boy, Vic, you're holding off to the last minute, but maybe not as bad as Wayne. Wayne's like, I do my Christmas shopping on December 26th. There we go. So basically, Wayne creeps around his house, right? And he sets everyone's watches back a few days and tries to convince everybody, what, today, the 15th? No, it's not the 15th. It's only the 10th. It's the 10th, folks. Yeah, why not? If it works. Yeah. And this is something I used to tell my family. It never went over well, but I said, why don't we exchange gifts on like the 27th every year so that we can, take advantage of Boxing Day sales? My mom was just like, don't talk so crazy. Yeah, that was pretty much what I would get. But, could save some money. All right, Larry is in the house. Let's see. I've been doing a lot of research in different crude oil tanker companies, and I found a deeply undervalued one I think you should have a look at. Scorpion Tankers. Scorpion Tankers. Huh. Well, that's interesting. Well, let's see if we can do oh, that didn't work. All right, let's do I don't know what I just did. All right, I'm going to pull myself. All right, pull myself back here. I am still working on some of these buttons with this one because they're just not getting exactly where I want to. But yeah, we'll look at that a little bit later, Larry. Once I get through the news, I have a feeling it's just going to be really hard to remove all of this. Let's see. JJ says, oh, by the way, I'm going to redo my intro video, taking notes like you said. Yes, JJ is starting a channel, and he has shared with me an introduction video, and I gave him some feedback. So looking forward to seeing take 2. Vic says, will we get a Santa rally? I'm still hopeful. I'm still pretty hopeful on that. We're seeing more red than I was anticipating, because I was thinking we weren't going to get a ton of tax loss harvesting. But some of the red, too, is just been a lot of uncertainty going on. I think once we get past Wednesday, and that's when the Fed does their rate hike, I think that's going to calm things down a little bit. So I'm still pretty stoked. I'm still pretty stoked for a Santa rally, and I'm still thinking we're going to finish green for the month. So Prairie says, good afternoon, community. Happy Sunday afternoon. Bismarcky says, in Christmas spirit, every time someone hits the like button, an angel gets their wings. Oh, there we go. There we go. Nice. Vic says, CVE just gifted me some nice dividends, a December 31st payout. Nothing wrong with that. Nothing wrong with that at all. Lisa says, I used to really get into Christmas, but now it's just another day. Oh, Lisa, that's too bad. That's too bad. I always try to have fun with it. I have fun. I always have fun. Wayne says, we celebrate Boxing Day. Hey, what's in the box? What's in the box? Yeah, love it. Let's see. See, Candace had no body. Actually, JJ, one time I had no body. I was guesting on one of the Danter Banter live streams when they did Crypto Night in Canada. So I put the green screen up behind me, and then I threw a green turtleneck on, some green gloves, and I basically was a floating head for that stream. So I was just a floating head. It was absolutely hilarious. All right. She's the new Ebony Scrooge, or Scrooge. I think you're saying Scrooge, aren't you? In real time. Let's see. Prairie says, Christmas for us was visiting my brother in Edmonton. Hasn't been the same since his passing in 2020. Oh, I'm sorry to hear that. Hopefully you can find some fun, at least something. Paul says, let's see, you could show yourself as a circle over top of the Christmas next to the title if you want to show something large in the rectangular box. Yes. All right, Jagwinder says, thoughts on Toromont Industries. I'm still bullish on the industrial sector. Now, I know with Toromont, they've been doing pretty good most of the year. They are retracing a little bit right now, but we are seeing a lot of that in that sector. And when we look at Toromont, particularly, one of the other things I really like, they have a very low debt to equity ratio, so they're not carrying a lot of debt. So I think that does make them pretty good. I'm bullish definitely long-term for Toromont. All right. Jordan says, my gift for Christmas this year, nice and affordable silver. Ooh, there we go. If the gift inspires one to start a stock, hey, great. If not, they still have something that will gain in value. Yeah, absolutely. Bismarcky says, that line is from It's a Wonderful Life. Yes, but with the bell, right? Instead of the like button. So nothing wrong with that. All right. We have got another story. So Air Canada, the federal government, they were holding a bunch of shares in Air Canada, and they have now sold them. So back in the pandemic, they had a bailout package for Air Canada, and part of that package was that they were going to buy a 6% stake in the airline, and that cost them about $500 million. Now, in addition, well, also in that package as well, they also gave them a $5.9 billion loan with really low interest. So they did sell off those Air Canada shares as Air Canada hit 25.28 this week. So it was maybe the government was watching my channel and they took that swing trade a little bit longer. But yeah, they did really well. They got in roughly 25.05. So they did make a profit on that. Now, interestingly enough, the government was actually honest. When asked about it, if they were selling those shares basically to help with some of their spending announcements that are going to be coming out on Monday when they have their economic thing. They actually said yes. They said yes. So the government wants to spend more money, and they're just pooling it all together. You can tell an election's in the air, can't you? You totally can. But yeah, that is pretty interesting. Pretty interesting for sure. All right. Let's see. Lisa says, I'll be buying more silver and gold soon. T-Bank ETF. Yeah, not too shabby. Let's see. Jackie says, I sold all of my Air Canada this week also and bought BCE. All right. Yeah, like I've been slowly adding to BCE. I'm going to run a kind of a similar swing trade to Air Canada, but I think it's going to take longer. I think this will be one I'll get lots of opportunity to add to. All right. Nis says, I did read something about USA stock exchange is valued higher than all the other stock exchanges together for the moment. So when will it be a correction? We will feel it. Yeah, I mean, the United States, I mean, they have the largest economy in the world. Their stock markets are massive compared to everybody in the world. Yeah, you could pretty much add up all of the other exchanges. And I think the US would beat that. But, they will have a correction. Of course they will. We'll have another bear market. And keep in mind, a bear market, you normally can drop about 25%. So that is in store. That is in the cards. The big question, I guess, is when. When is it going to happen? I don't think it's going to happen. Very earliest would be the summer. And I'm kind of almost thinking maybe 2026. But if it does happen in 2026, I think early, opposed to earlier than later. But it is coming. It is coming for sure. Let's see. The plane is inside the cockpit or an illusion. Well, no, that plane is outside. Kind of. Oh, you're right. Darn AI. What are they doing putting a plane inside? Maybe it's like I don't know. That's hilarious, though. I'll have to go in and actually edit that just to fix it. Now that you've pointed it out, Paul, thanks. But no problem. Let's see. Government spending like a drunken sailor. Yeah, kind of. They're definitely getting their selling in for sure. All right, let's get to our next news story. We'll get these stories out of the way fairly quickly today. I have a feeling. All right. So the government, they have announced an increase to their new low-cost loan that comes with basically a 2% interest rate for homeowners who want to convert part of their house into rental suites. So whether it's creating a basement apartment, as this beaver over here in the picture is doing, or maybe you're adding on some rooms or something to your house, but they're trying to basically create more density when it comes to rental density. And that's pretty cool. So before, and the actual program, it's called the Secondary Suite Loan Program. They had actually rolled this out initially in the spring at $40,000, but this increase has knocked it up to $80,000. So these are 2% loans over, and it's spread over 15 years. So, in 15 years, you pay it all back. And, if you actually used it, and let's say you did convert your basement into a rentable unit and then started renting it out, you could probably rent it out to cover the loan. and maybe even a little bit more. So it's not a bad deal if that's something that you want to do. So just a thought. And a 2% loan, that is pretty cheap, for sure. So what can I say? Um, yeah, I've lived in a converted basement before that was rented out. So it's not too shabby, not too shabby at all. Let's see. Prairie says last week was full of great buys. Picked up some more CNR, BCE, Enghouse, and HYLD. Nice. Let's see. Pretty young beaver carpenter. First job. That beaver's first job is a carpenter. What can I say? Tom Lee says S&P 500 7,000 by mid 2025, but 6,600 by end of year 2025. And that's a possibility. That's a possibility. If we got a bear market towards the end of 2025, yeah, that could happen. But I look at it this way: you are speculating when you look out this far. There's a lot of different things that can happen. For one, the only thing I think is certain is that we get part 2 of the Trump pump coming up in January, and I think that's going to be good for the market for a bit. But once that wears off, then we'll start to get back to business as usual, and that's when we become a little more vulnerable. But we'll see how it goes. We'll see how it goes for sure. Speaking of Trump, um, I know you guys love this picture, so I'm like, all right, I just need to get a Trump story in here, and this time around, we got a Trump story. It's a little bit more detailed, I think, than you're expecting, but so this week, Donald Trump decided to troll Justin Trudeau in a Truth Social post, referring to him as the governor of the great state of Canada. So nobody's really taking it really that serious, although I'm sure it annoys Trudeau to no end. But it was an opportunity. It was an opportunity for some polls to be done. So in a recent, not a recent, as in a poll this week, they polled 5,000. They polled 1,520 Canadians, and here's the results. And I thought they were kind of interesting. So it turns out that the answer is 13% of Canadians polled said they wouldn't mind becoming the 51st state. I actually was kind of surprised that it was that high. When you break down their poll politically, it works out that about 20% of conservative-leaning folks thought it was a good idea, compared to 10% of liberal-leaning folks. Now, the NDP-leaning folks came in at the lowest amount at 6%. Honestly, the 6%, that's kind of where I would have thought most of Canada would have been. But this is a small poll, 1,520, but definitely interesting. Definitely interesting that, there's a lot of people out there that think, okay, yeah, that wouldn't be a bad idea. Honestly, there's many things that would improve if something like that were to happen. For example, prices. A lot of prices would be cheaper because we would start falling in line with the US. And that would be it would be a very interesting, I think it's a great thought experiment. At the very least, it's not going to happen, but what if? I think one point, there was a mini series that had Paul Gross, the guy from Due South, was in it, and he played the prime minister in. There was some kind of a big water thing, and basically he manipulated things so that Canada would get annexed by the U.S. And that was his goal because he wanted to actually become the president. And he did, and I think there was 2 miniseries in total. He eventually became the president. But then, of course, as things happen, he became the president, and then the fact that he manipulated the entire thing came out through the press, and I think that was the end of his career. But it was actually not a bad, it wasn't a bad 2-part miniseries, if I remember correctly. It's been a long time since I saw it, but yeah. All right. King of Day says, Thinking of moving the kids RESP to Quest Trade from TD, as Wealthsimple currently has no self-direct RESP. Now, let's see. What do you think about the ECN fees? Do you know how it works? Um, I'm not sure what type of fees you're going to look at when you're moving these, to be honest. I'd have to do a bit more research on that, King of Day. But let me just give me a second here. I am just getting my my screenshot. I'm gonna. Whoops. There we go. All right, I got it. I will. I'll take a look at it. Ask me next time. So I'll take a look and see what I can find out for you. Missy says, house loan causes a tax on primary, so when you sell, it's capital gains. Yeah. I don't know. I don't know how that looks. I mean, technically, if you're converting part of your primary residence, yeah, because if you're selling, you're technically selling that other unit as well. Like I would think it would still fall under that, but you guys are asking me questions I'm going to have to go look for more information on. But as far as I know, I don't think that's going to be the situation. But let me verify that as well. I got to do this again. Command Shift 4. Here we go. Whoa. Never mind. Something weird just happened. All right. Let's try this again. Command Shift 4. There we go. All right. All right, there we go, Missy. I'll look into that one further as well, because yeah, interesting. Let's see. JJ says those ECN fees are super minimal, and oh, okay, maybe JJ already has these answers. I love it. Let's see. These ECN fees are super minimal and depends on the ETF, CEF stocks that you purchase. Generally speaking, they're worth a couple of cents on the dollar. So for 100 shares, it's like 5 cents. Okay, that's not too shabby then. Let's see, I wouldn't worry about them. The commission fees that you pay for purchasing stocks and selling holdings are worth a lot more. Yeah, and usually too when you're moving. So in this case, if you're moving from TD to Quest Trade, I'll look as well and see if there's any of these, you have any funds in there that are like TD specific, because sometimes, especially if you weren't self-directing on it, if TD was managing it, sometimes they will actually go and put mutual funds and things like that in there as well. So you may want to look at any that you can't access through or you can't purchase over on Quest Trade, and just sort of, you could always convert those into cash, and then that's just straight money that's being crossed over at that point. Let's see. JJ says minimum $4.95, max $9.95 per trade. Yeah, and keep in mind too, I don't have an account at Quest Trade, but if you were to go to somebody like Canadian in a T-shirt and go through like his extra information, he's got links in there for Quest Trade that I think if you use the affiliate link, you end up getting so many free trades initially. So that might be a way to go if you haven't already set that up. All right. Haha, sorry, we are making you think today. No, I don't mind thinking. That's what I'm here for. Actually, it's fun. I love it when you guys come and ask me something I don't know. It's like, opportunity to learn. I'm going to learn something here. So I'm okay with it. Bring the hard questions for sure. JJ says, Quest Trade does reimburse you for switching to them, but I believe the minimum of reimbursement amount is about $20K. Okay. Yeah, and of course, Wealthsimple is kind of ruled out in this one situation here. All right, Paul says, the house loan to renovate to rent basement out would not be capital gains if area less than 50%. Okay. Per my accountant, when I did crypto mining with 5% area of my house. Yeah, and you see, and this is kind of where I was thinking in this direction. But I'll just double check everything for you, Missy, and bring that. All right. Now, guys, we have a new celebrity beaver. A few of you got to see it. A few of you have gotten to see it. But yeah, let's take a look at our new celebrity beaver. Here we go. Here we go. This is my John O'Leary. Sorry, my Kevin O'Leary beaver. My Kevin O'Leary beaver. I'm not going any detail into the process of making this beaver because I'm I think last night when we were doing the financial blogmas, we had a conversation and I started to explain thing and I accidentally said something naughty that really wasn't naughty, but it sounds very naughty. So we're gonna leave that alone. But this is the new beaver. So Missy was mentioning this the other day, and I actually found the story on it. So a $70 billion AI data center industrial park is being proposed for northwestern Alberta. So the municipal district of Greenview on Wednesday announced that it signed a letter of intent with Kevin O'Leary Ventures to purchase and develop thousands of acres of land just south of Grand Prairie. So if this moves ahead, it will be the largest AI industrial park in the world. So that's huge, definitely huge. And because Kevin O'Leary's involved, you can guess, they're going to call it Wonder Valley. So Wonder Valley, oh boy. And now the power for this park, it would all be off the grid. So they're looking at natural gas as well as some geothermal energy to power everything. And part of the reason that they're choosing this location is one of the areas because of the cold weather that's there. That's ideal for keeping chips cool because, pretty much you can utilize that to, keep all of the chips cool very cheaply, very cheaply. It's not exactly like open up your window at winter and keeps your chips cool, but you can pipe some of that cool air into a cooling system, which is very, very economical in the winter for sure. There's also, in addition to that cold weather, there's quite a big skilled labor force. And Alberta also has some very pro-business strategies or policies. So that's absolutely huge. And that's why they're considering Alberta. So Wonder Valley, it's expected to attract attention from global investors and industry leaders. And their goal is basically to set a new benchmark for large-scale data infrastructure projects worldwide. So that's pretty cool. That is pretty darn cool. I'm liking it. I'm liking it a lot. Yeah, the O'Leary Beaver. Yeah, let me just say, how can I say this without saying bald and the other part together? I tried that. It did not look very good. This actually, with the fur, was pretty much the best. So, maybe it's a younger Kevin O'Leary. So we'll leave it at that. Missy says, haha, Mr. Wonderful. And I love this. Jonathan said, Mr. Beaverful. So that's great. All right. Missy says they can't build in the States because of permits not allowing generators. Daniel Smith already approved the permits in Alberta. Yeah, absolutely. That's you got. I mean, when it comes to premiers, Danielle Smith, she is absolutely ahead of the game in a lot of areas because it's not just things like this. It's also trying to get those oil pipelines. Like she's looking at twinning pipelines to get more oil to the States by the time Trump takes office. So that's definitely interesting. All right. Jordan says, speaking of mail, all three of my supplies of gold, silver, and moissanite are still getting packages, though using off-brand courier services. Small guys and gals to the rescue. Yeah. Well, a lot of these smaller couriers have been absolutely making bank as they've been picking up the slack that this strike has had. So, when when Canada Post reopens this week, if everything goes according to plan, they're going to have smaller market share. Some of these people are going to, some of their customers are going to be like, no, we're not going back. These other folks are doing a great job. So we might just leave things be the way they are. So definitely interesting. Missy says Beaver Valley is beside Wonder Valley. Oh, maybe. Well, when I make these beaver pictures, ChatGPT one day said to me, would you like me to call this world you keep making pictures in, Beaver World? So I was like, yeah, please, let's call it Beaver World. So ChatGPT knows it as Beaver World. So, it's fantastic. There's a lot of beaver valleys, I'm sure, in Beaver World, but I think every community in Beaver World needs a beaver valley. So we'll just we'll leave it at that. We'll leave it at that. All right. All right. Bye, Kevin. All right. We have one last news story, but we do have some crypto stuff. We got some crypto stuff too. All right. So the feds, the Canadian government, they've announced some new Arctic policies this week. And part of those policies is that we're going to be appointing an Arctic ambassador to look over our far north. So they will open consulates in Alaska and Greenland, which will be used for coordinating some Arctic talks with, of course, the U.S. and any other countries that have a stake in North America, in the North American Arctic. So that would include Denmark, because they own Greenland. So the Arctic is set to become basically a geopolitical hotspot, of course, as climate change has been melting the ice, basically opening up, new pathways through the north, as well as resources. So we got new shipping lanes and access to a lot more natural resources than we did before. So according to the U.S. Geological Survey, nearly a quarter of the world's undiscoverable potential exploitable fossil fuels and trillions of dollars worth of minerals are all sitting up there in the Arctic just waiting to be taken. Now, Russia, of course, knows this as well. So Russia has been contesting a lot of this area, trying to lay claim to more of that Arctic pie. So it's kind of important that we protect our Arctic. And I kind of agree with this one. The last thing we want is to sort of let Russia just sort of, storm in there and take a lot of those resources. So we definitely need to, I think, get ahead of it on this one. So far, no funding has been yet to be announced for this project. So definitely interesting. We'll have to sort of see how that all goes. All right. I think I got a couple of small crypto stories. So Amazon shareholders, they have written in to the company and have requested that Amazon invest in some Bitcoin. And they recommend that Amazon hold 5% of their assets in Bitcoin. So we'll have to see what Amazon says. Now, Microsoft also had held a vote because they were looking at possibly adding Bitcoin to their assets. But what ended up happening is they had an overwhelming vote against it. So Bitcoin will not be added to the Microsoft balance sheet. Now, one other crypto story, and I thought this one was kind of interesting. So Vancouver's City Council passed a motion to explore ways to make Vancouver a Bitcoin-friendly city. They're looking into the feasibility of accepting Bitcoin to pay taxes and converting a portion of the city's reserves into crypto. Now, it'll be interesting to see. Now, one problem they will have, though, is that currently laws do not recognize crypto as legal tender. So that might be something they will need to navigate around. But it's interesting that Vancouver is looking to make a little bit of moves in that direction. All right, and just before I remove the news here, last little bit, coming up this week in Canada, on Tuesday, we do have the CPI. So we're going to see if inflation is still being a little bit sticky. And we also have retail sales coming out on Friday. So we can take a look and see. These are November retail sales. And because of the announcement of that tax holiday, we could see some kind of an impact here, which will be very interesting. Of course, in the United States, on Wednesday, the Feds will announce their interest rate decision. Most people are expecting a 25 basis point cut. On Friday, they also have their PCE, so personal consumer expenditures. That is coming out on Friday. Not a lot earnings-wise on either side of the border. Probably the biggest company dropping their earnings this week is BlackBerry. Hey, if you're excited for BlackBerry, then hey, this is your week. But yeah, that's a wrap for the news. Holy banana bread. So now, haha, I can get rid of that. We can go full screen. We can go full screen, and we can, of course, pull up anything else that we need to, which is really cool. All right. Missy says, anyone change their mind in investing in drones? Check out RCAT. Interesting. Interesting. Well, you know what? Haha, I could do that now. I can actually do that now. Let's go take a look here. RCAT. All right, here we go. Red Cat Holdings. All right. Let's just pull up here. Look at this. Yeah, look at this. Of course, drones right now are a big topic in the United States, as they're having a little bit of a drone problem lately, as many of you have probably probably seen. So yeah, what can I say? Paul says Justin Trudeau and Pierre Poilievre, etc. Beavers. It's probably going to happen eventually. It's hard to say. I mean, yeah, you know, but it probably will. If I have like a Justin Trudeau specific story, then I might need a Justin Trudeau Beaver or a Pierre Poilievre. Yeah, probably will. And the big thing is though, with these beaver celebrity beavers, is you got to be able to recognize who it is without me telling you. If I can't get it to that point, then it won't work. Then it won't work. But yeah. King of Day says crypto gradually accumulating Solana and XRP lately. Yeah, I think they're both good coins. And Missy wants to know where you think XRP is going to. I think XRP is going to have a pretty good year. They've, as it is, one of the big issues, one of the big monkeys on the back of the XRP has been the SEC. But now that Gary Gensler is resigning, Trump is appointing in a new SEC commissioner who is crypto friendly. That's going to work in XRP's flavor, in their favor, flavor. In addition to that, Ripple has a stable coin that they're waiting to get approval on as well. There's also an XRP ETF that's being worked on as well. So if we can get that, that would be fantastic. Let's see. Prairie says Santa's North Pole is part of the EU. I don't know about that. I'm Canadian, so I'm claiming Santa for us. I think Alaska thinks he lives there. But yeah, no, Santa's Canadian. Santa's got to be Canadian. I mean, quite literally, you got to be a really nice person to give out all of those gifts, and Canada fits that role. We're nice people, so Santa's got to be Canadian. Simple as that. Lisa says the city of Detroit recently started accepting Bitcoin as payment for property taxes. Yeah, and I believe, I don't know if it was Miami, but I know in Florida there was one city that was doing something similar to that a couple of years ago. So that's not a bad thing at all. All right, now I did want to get back to, let's see here. Larry had mentioned about, what was it? Scorpion tankers. I wanted to take a gander at this Scorpion tankers. See if I can find them here. I'll try this in here. Larry, if you're still in here, if you can give me a ticker for Scorpion tankers, because I'm not finding them at all. But yeah, I definitely wanted to take a look at that. Paul says, any problem with SOL? It has been ranging since the summer. Bitcoin could be better in the short term. Yeah, I mean, Bitcoin, heck, guys, let me just show you something here. All right. Oh, that's Tesla. Let's go to Bitcoin here. Bitcoin. So yeah, Bitcoin had been in this pattern I've been charting going into the weekend. And my prediction was they were going to break up to here. And they did. They made it here, and then they went down. But now they're back up again. So they're getting close to a new all-time high. So that's not too shabby. So we'll have to see how Bitcoin goes through through this week coming up. Definitely going to be good. Definitely going to be good. All right. Let's see here. Larry says Scorpion was $3 billion in debt, now $697 million. That I like. I like that a lot. Let's see, and will be 14.7 million the end of 2025, making 29,000 per day per ship after expenses. 111 ships, and they brought back 25% of their shares. So, or they bought back 25% of their shares. So 1x earnings. That's not bad. That's not bad at all. STNG. Let me see if I can find that. Here we go. STNG. Here we go. No, those are all right, right here. Scorpio. Oh, Scorpio tankers, not Scorpion. All right. That's why I missed it. That extra N, it's all right. Go away, ad. Go away, ad. Hello, ad. Go away. All right. Let's take a gander here and take a look here. All right. So they had been doing good, but things are going down. But keep in mind, oil's been going down, so that might be part of what's going on here. But let's take a gander at all right. Yeah, it's not giving me a lot of information right now, but that sometimes happens. That sometimes happens with US companies, which is why we go to Yahoo. All right, we'll go into Yahoo Finance. Let's see, STNG, Scorpio tankers. All right, statistics. There we go. This is what I'm looking for. All right. Let's see. Total debt to equity right now, 31%. Yeah. And this is kind of where Larry was saying, I mean, that they have done an incredible job. Look at this, only 31%. That's not bad. That's not bad. It's looking pretty good. Couple other things. This is a really good looking return on equity, 27.29%. Return on assets, 10.93. That's not bad either. So I'm seeing things I like in here. I am seeing things I like in here. And that's despite. Whoops. that was our thing earlier today. That is despite the fact that, right now they kind of be on a downtrend, but I don't look at that as being a downtrend. I kind of look at, let me pull this back up. I kind of look at this as being not a bad entry point. Oil's going to rebound. There's going to be more demand. That is going to go back up. So I think that's a smart play. I think Larry is onto something with this one. Yeah, I like it. Vic says, don't be a Scrooge. Hit the like button. Yeah, absolutely. Hit the like button, guys. I have no clue how many likes we got, but hit the like button. I'll have a drink of coffee. Oh, gosh. Coffee is always good. Paul says, people are doing perpetual 3x leverage on Solana and sell at each top range. Yeah, absolutely. Exactly. Because of oil down, so the whole sector is down. That is absolutely fine. Missy, they transport oil. So think oil tankers. Whoops, accidentally jumped over. Sometimes things pop in and it moves things, and I go to click on it. Let's see, they make 1.1 to 1.6 billion a year, market cap at 2.5 billion. Yeah, I am liking them. They look pretty good. Larry. That's a nice find. Ian says, when do you know when to get out of a stock? I know you say when I want to buy something else, but anyway, I'm thinking about selling Extendicare. Bought for the dividend. It's low now. All right, so Extendicare is EXE. Let's pull it up. Here we go. Oh, yeah, they've come down a little bit here. All right, well, they've come down a little bit, but I mean, they've had a good year. Like, this is one of these companies. They do a lot of senior support, like old age homes and things like that. So they are down a little bit right now. But let me just see here. No, it's not an ex-dividend thing because their ex-dividend date's coming up on the 31st. So you'll see another little drop there. Dividend yield 4.771. So if you're looking to get out, and this is what I kind of say, well, one, where did you get in? If you're, I mean, unless you, quite honestly, unless you got in somewheres up in here, you're probably in the green. So yeah, I mean, there's nothing wrong with getting out at any time. You could wait for this to rebound, or maybe you could just say, oh, maybe it's going to go down a little bit more. We do know it will go down a little bit at the end of the month, but between now and then, it could very well rebound. Keep in mind, we did have that second 50 basis point rate cut, and this is going to be a company that is going to be kind of like a REIT in a way, because they do hold a lot of properties, and those mortgage costs are going to be going down on those. So that's going to help free up a little bit of cash flow. So that is something to keep in mind. But if you want to get out and you've got other opportunities, and this is what it always boils down to, right? If you have another opportunity that's going to make you more money than what this is going to make you, and you're in the green, even I'll leave in the red myself. If I have an opportunity that's going to make a lot more money, yeah, of course I will. That makes sense. I have a feeling though that you're in the green. Let's see. Stock is up, but I bought it for the big dividend. Okay. And let's see, I'm up close to 50% plus dividends. Oh, there you go. Yeah, there's no problem leaving. No problem at all. Dividend is kind of low for my liking. Yeah. Ian, if you want to leave and you're in the green, I don't see anything stopping you. I don't see anything at all stopping you. Just do it. Just do it. Get out. Find yourself something better, and make some money. Make some money. That's the thing. We're still in a bull market. While we're in the bull market, there's lots of opportunities, but sometimes you just don't have that luxury to sit into something that's being a low performer for a long time. Because soon enough the bull market will be over, and we'll be heading into a bear market where you want to be moving. You want to probably move some of your assets into one more defensive stance as you go into that bear market. But I just want to make sure that you guys realize I don't think the bear market's happening this year. I don't think it's happening early next year. I think it's a little bit further out, but I could be completely wrong. So that's something you guys want to keep in mind, because nobody truly knows. Nobody knows when the bear market's coming. Like, the bear market may have already started. It could have. Sure, it could. We could be in the beginnings of a bear market without even knowing it. When the last bear market came, everything looked great except for in tech. So tech started a little bit early. Tech just started going down at the end of 2021. And then everything else followed basically a couple months later. Everything else then did its plummet, the S&P and all of that. But tech went first. They were kind of the canary in the coal mine. Now, there's no guarantee that tech will do it again, that tech will be the ones that lead the way into the next bear market. There's a lot of exciting stuff going on right now in tech. We're on the verge of a whole bunch of things with AI, and with AI agents being able for tech companies to show that their investment in AI is paying off. And that's kind of where a lot of the funkiness we've seen in tech over the last few months, even over the whole last quarter, has been just investors saying, how are you going to make us money with all of these investments in AI? You haven't shown us how yet, other than Meta. Meta has. So now we're getting to the point that they're starting to show. We've already got a lot of cool stuff that's been dropping from OpenAI. OpenAI. So for example, Sora. Sora, you can go and you can make an absolutely cool video, like just right off the hat. Like, I made the goat video. The goat video that we're using right now is from Sora. I also had Sora animate my subscribed little screen, in the middle, where I'm like, a sub to the channel, blah blah blah. I got a slight little animation in that now, and I think it's pretty darn cool. But things are changing. And it's not just OpenAI. Everybody's improving. Even X has come up with Grok version 2, and before, I think they were only rolling it out to people who were paid versions of of X, I think now, and now everybody has full access to it. So they're making a lot of changes. We're seeing a lot of things like that coming along. We're starting to see agents pop up. AI is going to be big, and that's going to keep tech up there for a bit. And keep in mind, here's the thing: even if the economy sucks, but tech is doing great, tech they have so much power with their market cap that they can prop up the S&P 500 and prevent it from going into a bear market. So that's another interesting factor to think about as well. And like even right now, look at OpenAI. OpenAI is having their 12 days of OpenAI. So every weekday they're releasing something new. So they dropped Sora. They dropped the non-preview version of OpenAI 01. They actually made an AI version of Santa Claus. I mean, they're doing some interesting stuff. So it's all coming down. It's all coming down the pipe. So this is going to be an exciting year. And I have to make a prediction video for, I think it's January 1st. So I am, this is going to be a hard year. This is going to be a really hard year to call. There's so much happening. So it'll be interesting. Mary is in the house. All right, guys. Vic no longer has to tell you to hit like because Mary's here. So I might as well have some coffee because you guys are busy hitting the like button right now. All right. Ian says, might sell to fund the TFSA, then put the rest into RRSP to cancel out capital gains. Okay, fair enough. Yeah, absolutely. Because, keep in mind, guys, you guys are getting $7,000, a new contribution room in that TFSA. And, guys, any of you who are using the TFSA as a tax-free income producer, and you're pulling that income out of there, hope you've been keeping track of that too, because all of that income you've pulled out of your TFSA, you're getting all of that space back too. So let's say through the year, let's say you've pulled $10,000 of income out of your TFSA. That means on January 1st, you'll get your $7,000 and you'll get that $10,000 back too. So you'll have more room than perhaps you think that you have, but you'll have more room. And that's really great. Anise says, shipping pay a lot when it's up cycle, less down when in down cycle. Okay. Fair enough. Yeah, exactly. And this is going back to Scorpio. Let's see. I'm down 20K in a natural gas company, different get out time. Yeah, absolutely. All right. Sophie is in the house with a hey crew. And this is mentioning real money only 4 to 5K. Well, that's not that bad. It's not that bad, but still, I still don't like to see. Things go that way. John says, put a smile on my face when I saw JEPQ on your Canadian dividend video. Love that they opened in Canada. That was a really good video for those who haven't watched it. Lots of good ones on there. Yeah, absolutely. Yeah, and I'm going to probably do a few more list videos this week as well in the financial blog miss because they seem to be going over pretty popular. You'll be happy to know, John. I've also added JEPQ to the 0 to 100K challenge because I like it. I'm like, hey, I like this one. So it is in there. Ian says, Bell pay, BCE pay quarterly. Yes, they do. Let's see. I'm thinking about buying some. I want them to announce a discount cut. Then I will buy at a discount, or maybe they won't cut. Yeah. It'd be interesting to see if they're going to cut or not. Like I know they do have a pretty deep moat. So they don't have to cut. They really don't. I think it would make sense to cut, just to finally, get things out of the way. Now, another interesting thing about Bell as well is a lot of people have assumed that they're going to sell TSN, and Bell has come out and said, no, we are not selling TSN. So that's the sports network. They're keeping the sports network because recently they sold Maple Leaf, the Maple Leaf Sports over to, I think it was to Rogers. But they are holding on to TSN. They're not getting rid of TSN. Larry says in up cycles they make 40 to 60K per day per ship instead of 29K per ship. Yeah, exactly. It's kind of night and day, and oil will be making a rebound. I don't think it's going to happen this year. Probably not at the beginning of next year, unless we just happen to have a really bad winter. But and when I'm talking winter that way, I mean world winter, like as in mostly Europe. Europe needs to have a really bad winter to drive up the demand for oil. Um, it'll be interesting to see. Let's hope they. I don't want to say let's hope they have a bad year, but it'll be interesting. This year is going to be really interesting because if we get a peace treaty between Russia and Ukraine, with Trump saying he's going to do it, or let's give him the benefit of the doubt and says he does it. That's going to that's going to change things a little bit, especially if all of a sudden the sanctions on Russian oil start to go away. So we don't know how, we could get a peace treaty and the sanctions might persist, but I don't think they will. I have a feeling they'll start falling off at that point, but we'll have to see. It's going to be an interesting year. 9 says, JEPQ still doesn't allow fractional shares on Wealthsimple. Interesting. Maybe down the road they will, but yeah. So you might have to buy them in the holes. You might have to, well, not as in holes in the ground, but a hole. You might have to buy whole numbers worth. Larry says, crude in particular, they expect the next few years to be big because of Trump. Yeah. I mean, that's kind of why Daniel Smith, as we were mentioning earlier, wants those extra pipelines to get that oil down to the United States. Because even if Trump goes, drill, baby, drill, most of the stuff they're drilling down there is light crude. They want some of that heavier Canadian crude because they don't really have that. They don't have the capacity to actually work, not a lot, on that light crude. So they normally sell that. So they're going to sell all this extra that they're pumping, and they can then import that Canadian. Of course, provided we get the whole tariff thing out of the way. And I honestly don't think that's going to happen. He wants the borders taken care of, and I think Canada is looking at our border and saying, yeah, let's get this done. We can't afford a 25% tariff. So yeah, big time. Ian says, I own a lot of ENCL, probably the riskiest thing I own, and I'm down on it a few percent. Don't know if I should add more, hold, or sell. It really boils down to, I mean, like you said, you are in kind of a risk situation. It is going to come up. But I will point this out. If I see a prolonged down period for oil, something like ENCL, I probably would convert it over to ENCC. That's what I would do. And then when things start turning around, it looks like, we got the politics in place for for oil to be doing better, then I'm moving back to ENCL. However, here's the downside to that strategy. There's a lot of odds of political instability here and there. So, for example, oil did really well as the stuff with Syria was going on. That certainly helped. But if we initially get with Trump, let's say he gets in and he gets that peace treaty that he wants between Ukraine and Russia pretty fast, that's probably going to drive oil down a little bit initially. And if sanctions lift, that could do it as well. So we have a lot of interesting things to sort of look at, but that's kind of where I look at in that area. Let's see. So JEPI does fractional. Well, that's interesting. Because, I mean, they're both JP Morgan. That's interesting. I don't know why they would do that. Let's see. 9 says I'm bullish oil long-term, ENCL, ENCC, and XEG. Yeah. And I love all three of those. I know right now in the challenge, I'm holding XEG. I've got a fair amount of it actually. But, it's... I'm bullish long-term oil. Eventually we'll move away from fossil fuels, but we're not ready to do it. We're not even close to being ready. So we're going to be burning fossil fuels for a while before we need large scale. So one of the areas that I've been looking at is, of course, nuclear Nuclear, I think, is going to be big, but keep in mind, we can't just sort of say, okay, tomorrow we're just going to go nuclear right across the board. It takes a long time to build nuclear power stations. We don't have an assembly line that's just popping out stations, power stations. So we'll be still in oil for quite a while, and that's good. That's good because Canada's GDP kind of depends on energy. Energy being one of the big proportions of our country's GDP. Hamilton Robb says, I hope that if we beef up our border to stop fentanyl from going into the States, Trump will stop illegal guns from coming into Canada. Yeah, exactly. It needs to work in both directions. Now, there is one thing that does have me a little concerned. If we stop the fentanyl from going into the States, where are they going to send it to instead? Are we going to have, are we going to see higher rates of fentanyl in Canada? I mean, who knows? I don't know. That's why I asked. So I'm hoping. I'd like to see, yeah, both directions, absolutely. And with more helicopters, drones, things like that, get more people with the border security guards, security agents. Give them more jurisdiction. Give the RCMP whatever they need. Let's get this done. Let's get that border secure. And yeah, let's keep the guns out and let's keep the fentanyl in. That sounds funny, but yeah, let's keep the fentanyl in Canada. Well, if anything, let's find those people making the fentanyl and burn the stuff. Well, can you? I guess you can burn it. Hopefully, you can burn it. I don't know. Maybe if you burn it, everybody within 10 miles gets addicted. I don't know. So I'm just gonna leave it at that. So, yeah, good old fentanyl. Good old fentanyl. Yeah, it's funny. Whenever I hear about drug manufacturers, it always reminds me of university. So back in university in organic chemistry, I have to manufacture some compound or some, it was all organic. But it always ended up being a white powder, and then I had to put it in a baggie and take it with me because I had to submit it with my lab report. And I was always worried that, if a cop ever stopped me for any dumb reason and found me with a baggie of white powder, that I'd be in trouble until they tested it and found out it was a harmless, organic compound. But nonetheless, it never happened. I never got in any trouble, but still, I thought that was kind of neat. Let's see. Vineet says, you're so funny. Okay, well, I try. Well, it's not that I'm trying. I don't try to be funny. I just have this way of talking that sometimes unintentionally becomes funny, but sometimes it's intentional too. Ironically, when I intentionally try to be funny, it's actually less funny than when I'm, just not trying to be funny and the funny comes out. So, yeah, what can I say? What can I say? It's one of those things for sure. All right. Oh, guys, coming out on Tuesday. Coming out on Tuesday is I've been getting a lot of requests for another Yield Max video. So Tuesday, I am dropping a Yield Max video. Channel members can see it tomorrow. So yeah, we are coming out with a Yield Max. I'm gonna do basically look at the 10 of the top 10 Yield Max funds with the highest. Well, I've done two things: the highest yields, but I ranked them then by the highest total return. So I have a feeling that everybody will can pretty much say, I know what number one is before going into it, because there's only one that's absolutely obliterating everybody else. I actually kind of expect to see the ticker start showing up now, as one of you is going to get in there and claim that I know it. But that's coming out. We also have currently a vote for the next deep dive, which will be for next Friday. So this is your, for those of you who have been trying like hard to get Brookfield Corporation to win, this is your chance. It's pretty close. The last time I looked, it was pretty close in the voting. Actually, a little bit earlier today, I looked at one point, it was 25% for all of them. So I was like, oh, that's pretty cool. But I think there's a leader now. I think last time I looked, I think Enbridge was ahead slightly, but yeah, get in there, make your vote, let your vote be heard. Because I'm probably gonna have to start scripting that. I might have to do at least part of the script tomorrow, just because Friday I'm gonna get out and about, and we're gonna do our we're actually going to have the financial blogmas. It's going to be from somewhere in the city. I don't know if tomorrow is going to be the Parliament one, but it will be outside of the house, somewhere in the city. It's going to be fun. Not tomorrow, sorry, Tuesday. Tuesday. All right. A 9 says, I don't see oil being replaced anytime soon. Oil price should go up with inflation, in my opinion, long term. Oh yeah, no, absolutely. And there is only a certain amount of oil. Like, yeah, we mentioned there's a ton of it up in the Arctic, but that still has to be produced. There's only so much we can pull out of the ground at a time now. And, oil will eventually run out. Eventually. I think people overplay how fast it'll take for oil to run out or how fast we'll hit peak oil. Recently I heard one person or one expert was saying that the United States should hit peak oil in about 11 years. But I could have swore that probably 10 years ago, I heard the same thing. So it's, there's a lot of oil out there and it's not the best for the planet. But like I said, until we have, got all of our ducks in a row, we need oil. There's no way around it. Candace secretly Breaking Bad. There we go. Absolutely. Ah. I'd love to have the piles of cash, though. That's for sure. What are your thoughts on all-in-one income ETFs like VRIF and ZMI for retirees? All right. Let me take a look at one of these ones here. At first, I read it and I was thinking of, I was actually thinking of all equity initially, but VRIF, I haven't looked at them in a while. All right, so this is your Vanguard Retirement Income ETF portfolio. So, all right. I always like to take a look and see what we got. So, it's a pretty low, it is a pretty low return distribution of 3.909. However, you are getting a big growth component with these. And I do like Vanguard. So this to me, there's nothing wrong with it. There's nothing wrong with it. But it depends on what your goals are, right? If you're in a situation as a retiree that you're like, okay, I really need a lot of income coming tax-free out of my TFSA, then there are other funds that you may want to look at. There are higher yields out there as well. But if you're looking to create a moderate amount of income and you love the fact that you're getting some growth, this is ideal. This is absolutely ideal. Now let's look at the other one. What is it? It's a BMO ZMI. Here we go. So here is your BMO monthly income ETF. And this one you'll see you are getting a higher yield. So you are getting a little bit more in cash that you can, especially if you're relying on it, you kind of want a little bit more. Let's just go to their 1 year. So yeah, in their 1 year, they've been doing really well as well. Now, one of the things I do like about something like this, and we're going to go back to 5 years. The reason we're going back 5 years is we want to trace things from about the pandemic. So here's your giant pandemic. You can sort of see it looks like there was like an earthquake or something there in the chart, but that was your pandemic. And then we went into a bull market and we did fine, and it did fine as well. Then, of course, as we moved, can I get the date here? You can see early 2022. That's when we went into a bear market, and that's what happened. Then we leveled out, and let's see, they bottomed out right here around October. That's basically when the bear market ended, around October of 2022, and they have, they moved ahead. Well, they kind of went flat for a while before, really starting to pick up again. So that's fantastic. I do like that. So in a case like this, you're gonna have your stable dividends. That's nice. There are some funds, for example. So when you start to look at higher dividends, like there are funds I will not hold going into a bear market. So for example, I'll give you one. I'll give you one right now. HYLD. Um, hey, fantastic ETF in the good times. But let's do this 5 years again. Now, in this one case here, they only released this back here right at pretty much at the beginning of the bear market. What a place to release it. What a place to release it at the beginning of the bear market. But you'll see, it went down hard. Why? Well, because they use leverage. So that's the reason I don't want to hold these guys going into a bear market, because, that's quite a drop. And if you look, if you had bought up here at $17, oh boy, even now in the bull market, they're not getting there because a couple of reasons. Well, actually, one big reason is that you got capped upside potential. So and this market does well going back up, you're hitting when they're writing options, you are hitting strike prices. And when they hit the strike prices, they have to sell and then rebuy. And sometimes they're rebuying at a little bit higher. So you're losing little gaps of value. And that's why this is not even remotely close to where it was before. So for me, this is a fantastic ETF when we come out of, when we go into the next bear market, I won't be holding it. But when we start to level out and it looks like we're heading back into a bull market, yeah, this is a fantastic ETF to ride up through the bull market. So it's kind of one of these things. Now, when you're looking at a retirement portfolio, though, Rob, here's the thing. This requires maintenance, right? Because you need to be paying attention. You need to know when, I mean, sure, coming to a channel like this, yeah, I'm going to let you know when I see something coming. Of course I will. But here's that thing. You'll have to make some changes every so often. Now, going backwards, to once again, seriously, is it not there? It disappeared on me. Going backwards to something, for example, like ZMI, we're going back here once again. This one, like I said, you don't have to. We're looking at it here. You don't really have to worry. Yeah, it's come down a little bit, but its dividends are going to be fine. With HYLD too, they also did cut their dividends during during the bear market when things were a little bit tough. But yeah, this one's going to be fine. But you're just not going to have a huge, you're not going to have huge dividends like a 4.75%. It is a monthly 7 cents a share. Now, something that I like as well, and I think this is a good one for like if you want something nice and stable. Now, a lot of people say, oh, Canoe's only paying 10 cents. Well, that's a 7.7% right now. But here's what I like about Canoe. Let's go back those 5 years over a fund like Canoe. Here's your pandemic. All right. So pandemic, they went into a bull market. And then, and you'll see here, right here, they continued rising even into the initial part of the bear market. They really didn't have any kind of a fall until a couple of months into the bear market, and they really didn't fall much. Then they moved flat, and then now we're in a bull market. They're going back up again. This is one of the things I do like about this fund. Now, part of it is what the management crew does over at Canoe. One of the things they do is when the markets are looking like they're heading into bear territory, they will readjust their funds. They will buy more defensive funds. They will also increase their fixed income amount. So they prepare for it. They prepare for recessions, bear markets, and they've done very well with it. So for this reason here, something like this is nice and stable. You might go down a little bit, but for the most part, it's going to hang around here, and you're going to continue to get your 10 cents. Like their 10 cents did not cut. Was not cut once during the pandemic, during the bear market. None of that affected it. A lot of people are like, well, they should just pay more now because there's other options out there. But for a fund that is not using covered calls, this is really good, and you get your full upside potential with this one. It's not designed. I will say it's not designed to be like a big growth stock. It's just designed to provide nice, steady income. So to me, this is a beautiful one to have in a retirement portfolio for that reason. All right. Boy, that was a long answer. That was a long answer, Rob, but it was worth it. 9 says, yeah, I heard there is lots of oil in the Arctic that hasn't been extracted yet. Oh, tons, tons. And there's a lot of different things. Like obviously there's environmental groups that are worried about the ocean floor up in the Arctic and how, all the drilling and things like that, how it could certainly impact it. So, we have to look at a whole bunch of things, but I think it's going to be fine. All right. Cyber Warrior says, thank you for these sessions, QQ. I am keeping growth stocks in TFSA, US stocks in RRSP, and any leftovers get invested in a portfolio of covered call ETFs in a non-registered accounts. Thoughts? All right. I would personally probably reverse I would put the dividend stocks into the TFSA and your growth stocks. Those are the ones that are ideal in my opinion. They're ideal for sitting in. Let me show you. Uh-oh, I think I closed it, but let's see if I still have it saved. If I still have it saved, it would be nice. Let's see here. Oh, I don't think it saved it. I don't. Oh, yes, it did. Here it is. All right. Whoa, it made it really small. It made it small, but all right. I was gonna pull a couple things out of this here. Here we go. We've got Canoe. We've got a few different things in here. So when you're looking at this cash account, here's the thing. Anytime you put, can I make this bigger? I think I can. View, zoom in. All right. View. We're going to zoom in again. Actually, if I do my thing in plus, I think I can zoom in faster. There we go. There we go. I just want to have this big for a moment. All right. And actually, let me grab. I'm going to grab the other mouse because then I can actually maneuver a lot better. All right. Here we go. There we go. So when you're looking, this here's just a breakdown of some of the different types of taxes that can come on dividends. So when you have a covered call ETF, they have a lot of different tax types. So with a covered call, you are normally going to see, in some cases, not all, there are exceptions, but you will normally see a certain amount of return of capital. You could be looking at capital gains depending on how they're managed. If they're investing in US or other foreign stocks, you could have foreign income in there. Or you could, if they have Canadian stocks, you could have eligible dividends. You could have non-eligible dividends. You don't normally see interest in covered call ones. You could, though, but you normally don't. So looking at all of this, sometimes it can make your taxes a little bit complicated. So what I like to do is, and you have this right, you were talking about your U.S. dividends. Where are they? Oh, I threw things all over the place. But they're already in there. So like U.S. high dividends, yeah, you want to put those in your RRSP because they basically it's the only account that the Canada-U.S. tax treaty recognized as registered. Hence, you're not getting hit with a 15% withholding tax on that. So you get to keep everything, although it does get all 100% tax when you pull it out of your RRSP. Now, when I have stocks, like for example, Canoe has like a big 7% dividend. I'm going to throw it in a TFSA. I'm not going to put it here. Also, Canoe does use return of capital. So that means their adjusted cost base will go down. So you'll pay higher capital gains if you do that. Now, when I'm looking at things, for example, like Canadian growth, there's a couple of options. There are people that will say, I will throw my Canadian growth in my TFSA because I want to get my TFSA bigger. That's not a bad idea, depending on where you are in the process. So if you have a little TFSA, so let's say, for example, you're young, you're a new person. I'm going to move this out. So when I say a new person, not like a baby, but you're like just starting your investing journey. You're in your 20s. You've got let's say this was your first year. You've got a $7,000 RRSP or TFSA. Well, you can't put a lot of dividend stocks in that. So you're very limited. So in a case like that, I would stack it. I would stack it with Canadian growth. I would even throw US growth in there as well if that's what I was going to invest. And the reason why is I want to grow. I want to grow this thing. I just want to see it grow, 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 because then once it grows, all of a sudden what I've done is if you put the right growth in here and let's say you double the size, you take you got a 7,000's worth of growth stocks in here, and all of a sudden you grow it to like 14,000. You picked really well if you did that. I'm just using that as an example. And then the next year you get your another 7,000. So you can grow it. And that's the thing, like as a younger investor, so a brand new investor, you're high on your growth stocks. You're not really looking at a lot of the covered call ETFs. You're not looking at the high dividends. Your focus is grow, grow, grow. You want to look at them total returns. The bigger the return, the better, because you want to be expanding that TFSA. You want to get to a point like right now, if you were old enough, so let's say somebody in their 50s right now, and they never touched their TFSA, after the new year, they're going to have about $102,000 of space in there. Now, if you go back in time at the beginning of that time, you started throwing growth stuff in there. And let's say, in your 20s or 30s, whenever it was they first rolled out, I can't remember the exact year, but probably in your 30s, you could easily have a TFSA. You could easily have a $200,000 TFSA. And that's all from expanding it in growth. Now, that person who's in their 50s, if they keep doing it, let's say you manage to expand the thing to 300,000 by the time you go into retirement using a lot of growth heavy stocks. At that point, you can swap them all out. You can start piling in these covered call ETFs and things like Canoe, and create a massive tax-free income that's coming out of that TFSA. Tax-free, meaning it does not create your old age security to be clawed back, meaning that it's not taxed. So it can really, really greatly improve your situation going into retirement. Now, this was a max, like when I said this whole 300,000, this is a best case scenario, right? You could even have more, but I'm just saying it's kind of a best case scenario. What you want to do, if you're older, you don't have as much room, but you can still do this. And if you're getting closer to retirement, and you're not yet there, at that point, start looking at some really good total return type stocks. Ones that you're getting the best of both worlds, because you're not going to grow it as big or as fast, but you're going to at least start getting that income flowing. And a lot of times too, if you do have stuff like Canoe, if you're taking all of the dividends from that Canoe because you're still working, you don't need that income yet, you can always put it into a whole reinvestment back into Canoe and grow Canoe as well and sort of get everything growing. But one of the reasons that you want to, because when I talk about the whole explode things up with these growth stocks, when you start getting closer to retirement, part of the reason you're no longer doing that and you're going into something more of a hybrid and you're starting to move more towards income is that if something goes wrong. So let's say, for example, if you're a year from retirement and you need that income and you're still pounding, pumping up all your growth stocks in there, what happens if we fall into a recession, or a bear market or a recession, and these all start shrinking? You don't have that time horizon to sort of maybe recover from something that goes on here. Whereas if it happens when you're 20, as long as these are good stocks, they're going to bounce back, and you can continually add to them even as they get smaller, so that when they do bounce back, you really, really see a big increase in your space. That's kind of the reason when, because people will tell you, most people, I think most influencers on YouTube will hopefully tell you that, when you're younger, more heavy growth, growth wins the day. And then you look to transition, when I would say honestly, I would stay growth till about 40, then maybe start transitioning a little bit more towards those towards your more total return, your more higher dividend total return. And then, of course, once you're getting close and you're ready for retirement, that's when you start going into a bit more income for sure. All right. I'm really going off. I'm going off a lot today, aren't I? 9 says, I held HYLD through the 2022 downstream, but I was DCA regularly through the bear market. Yeah, that helps. That absolutely helps, because as it does go down, you are bringing your adjusted cost base down. That certainly helps. All right. Jay says ZMI rocks. Yeah, it's a nice looking ETF for sure. Vaughn says, late today, we'll listen after hours. All right. Well, good to see you, Vaughn. Good to see you. JJ says, I held HYLD super early on back in 2022. It was my first income-focused ETF. It's gone, though. A lot of internal fund changes. Okay. I just hate the fact that it's CAD hedged, especially how the CAD has gone to the gutter. Fair enough. Fair enough. All right. Let's see. ZWC was my first covered call ETF. That one is so bad. Glad I got out. Yeah. I mean, you're going to have higher fees as well on, I find a lot of the Z products. I mean, some of them are really good though, but yeah, I think that was one of those ones. Now, back then too, there wasn't really a lot of options. All right. Ian says, how will the low Canadian dollar affect WCP? I'm still up on WCP 10%, but it's way down from the peak. All right, let's take a look. Let's take a look here. All right, let's see. Whoops. It's like, where am I? Where am I? Oh, there it is, right there. All right. All right, WCP, Whitecap Resources. Let's pull them up. Bang, bang, bang. I used to actually swing white. I used to do some trading on them. All right. And they have, for the most part, they're kind of an up and down company right now. Now, once again, they are, and this is all about oil and gas, and you'll see right in here. So acquiring, developing, holding interest in petroleum and natural gas products. So not too shabby. Go further back. At one point, and this is right here is your pandemic, of course. I was playing them mostly in here as they were going up. So they were actually, when you looked at them on a day, because I was day trading at that point, when you look at them on a day scale, they were moving up and down quite a bit. So I did like them quite a bit. Now they've been moving forward, and I still think they're a good company. I still think, and let me just check here. Let me check on their debt. I haven't looked at their debt in a while. I thought it was pretty low. Yeah, 22% debt to equity ratio. They got a strong return on equity. The return on assets not bad either. So I still like WCP. Now, when it comes to the Canadian dollar, it's going to be interesting watching what happens to our dollar. Obviously, worst case scenario for the Canadian dollar would be those tariffs. So if we do get that 25% tariff, I don't think we're going to, though. That would be really, really bad for the dollar. Really bad. Like we're talking lows that would be historic almost. So that would be a bad thing. I don't think it's going to happen. I think we're safe on that. But yeah, I mean, I still think WCP is a strong company. I think they'll weather things. I don't see like anything. For example, they have a dividend. What is it here? I thought it was half decent. Let's take a look here. Yeah, 7.453. I think that's safe as well for the time being. So I do like them. I do like Whitecap. I don't really have any two complaints about them. Sean says, what's happening to TELUS? Oh, good old TELUS. Let's pull up TELUS. Now, the whole communication sector, they have a lot of debt. So that did not help them at all when we were in the whole aggressive rate hikes. Now that we're starting to get cuts, we are expecting to see a little bit of relief in this sector. There is a bit of a delay from rate cuts to, it actually showing and doing something half decent. But when we look at TELUS, they've been kind of doing this. It's been a very big downward slope. It's been the same thing. We're seeing the same stuff with Bell. We're seeing the same stuff with Rogers. Now, they're all at pretty big lows. Now, one of the problems that we have right now with the telecommunication sector, it's not just their debt. Like when we look at TELUS here, let's take a gander here. You'll see right now, well, right now they're not even profitable. They're losing money right now. But their debt to equity ratio is 183%. So they've got a good amount of debt on their balance books. And that's one of the reasons they're going to get a bit of relief from these rate cuts, because their servicing of that debt's going to start coming down. That's great. But one of the other problems that telecommunications in Canada are facing is that there's really not a lot of places to expand to. So when you look at Bell, when Bell went and did that, acquired that telecommunication company there on the U.S. West Coast, that was them trying to find a new place to expand to. Now, TELUS does have expansion plans within the TELUS Health aspect, but I think it's going to be a rocky road, but I do think they will recover. I think all three of these guys will recover. So Bell, TELUS, and Rogers, but I don't see it as happening soon. I think, if you have patience and you're a long-term investor and you don't have like an immediate time frame on it, it's probably fine to be DCAing into any one of the three. I think you're going to make your money back on the other side, but you're not going to get any immediate happiness from it. That's for sure, unfortunately. All right. Hamilton Rob says, my whole TFSA is Berkshire.B because it is growth. Acts like an ETF with all the companies in it. Plus, there's no withholding tax since they don't pay a dividend. Yeah, absolutely. All right. So that's what you're doing. You're exploding. You're exploding your TFSA kind of the way I was mentioning. Now, Berkshire B, for those of you who don't know, this is sort of the cheaper version of Berkshire. So you got Berkshire A. That's your 685,000. But the Berkshire B is kind of their cheaper offering here. And let's just go back 5 years and you can see, fantastic. Like, take a look. This is the little pandemic drop, And here, right here, this here is your a quick little bear market from them, and they were back off to the races. So that's a great Berkshire.B is a great growth stock for growing your TFSA. Absolutely. I think that's a smart move. Like, I don't know how old you are, and I don't know where you are in that spectrum of retirement to new investor, but yeah, that would be a great one for a new investor to throw in there and just start growing that TFSA. All right. 9 says, yeah, no options for cover call ETFs when I had ZWC. Yeah, exactly. I mean, back then, for high dividends, you had Canoe. Canoe was was pretty much at the top. And at that point, the only other real options, if you wanted to get some higher dividends, was split core stocks. So, now it's changed quite a bit. All right. Ian says, my friend at work was trying to get me to buy WCP at $1 back during the pandemic. Thought they might go bankrupt. Oh, yeah. Too bad you didn't buy some. Too bad. Larry loves Berkshire. Yeah, I think it's hard to not love Berkshire. Cyber Warrior says, thank you for the detailed response. You are the best. Awesome. I try. Let's see. Banana Bread Hathaway is solid. Absolutely. Berkshire and Banana Bread Hathaway. Two great, fantastic companies. All right, guys, if you get your final questions, get them in now. It doesn't mean that we're leaving right away. Sometimes I ask for the final questions and we're still here an hour later. So just get those in. I'm going to have some coffee while you guys come up with those questions. All right. Bismarcky says, really need to find a home for my PSA. These lower interest rates are not good for me. Yeah. It's kind of one of these things. I know pretty much most options for, sort of parking cash, the prices are coming down. I know that I just got a notice from EQ Bank. They were reducing their rates by 25 basis points. Now, the one thing I thought about it that was nice is that, okay, they're only reducing it half of the rate cut opposed to the full rate cut. But nonetheless, let's see. Reverend Ramirez says, I like HXS. It also avoids dividends. Yeah, let's take a gander. Let's take a gander at good old HXS. Here we go. So once again, this is your Global X S&P 500 Index Corporate Class ETF, and we'll pull up the 5-year. Yeah, I mean, look at this. I mean, it's gone from $41 to $88 in the last 5 years. That's not too shabby, not too shabby at all. And you can see right here is, now they actually began their bear market, right at the beginning of the year, sort of like everybody else. But it was a short little bear market. And you will notice on average, when you look at bear markets versus bull markets, bear markets tend to be short. Bear markets tend to be longer, much longer. So, it's kind of one of those things. It's never even. It's just one of those things. You can go back through history and you'll see that this holds. So when we do get the next bear market, you're probably going to look for something of this size. It might be a little longer. I mean, they do vary in size. I mean, technically, guys, this little blurb in the pandemic, it was actually almost like a bear market, like not a long one, a very short one. And it also, this moment in here was a technical recession too. Well, not a technical, but they classified it as a mini tiny recession. But it's, it's what happens when we have some disease that gets loose on the planet. What can we say? All right. JJ says, I'm about 1/3 of my your fire goal. Oh, nice. That's not too shabby. So that's financial independence, retire early. So fire, gotta love it. 9 says, yeah, my treasury bill's getting hurt with the cuts, but I like to have dry powder. Yeah, it's fair enough. It's fair enough. And that's the thing. Sometimes you will have some defensive stocks that you're looking at them and you're like, these aren't doing too good right now. And that's kind of the reality. Like, even when you look at, for example, your cash ETFs, the idea of putting cash into it's not to protect you from a fall. That's the wrong reason. That's not why you move stuff in. So, well, go back to the whiteboard. I like the whiteboard. Let's we'll head down here and we'll bring up our thing. So when the market, all right, here we go. So when the market is moving up, I'm just going to do a wavy, and then here's going to be there we go. So we're just going to say this is a cycle. So here is a bull market right in here. So what you're normally doing is let's go to green. So when you're going up, a lot of people are kind of like, what should I be doing? So when it comes to cash, so when the market is coming up, this is when you want to be adding to your, I'm just going to put a C here. You want to be adding to your cash position on your way up. And the reason you want to do this is when we fall into a bear market or a recession or whatever we fall into, at that point, what you're looking for is, and we'll go with orange. You can sell your cash positions on the way down to create the funds to buy all of these deals. We'll do another one in here. So ideally, your cash is going up when the market's going up. When the market's going down, like in the form of a bear market, your cash should be going down, but your assets are technically going up. They won't seem like they're going up because they're falling in price, but on the average, and once we move back into a bull market again, you'll be making money big time from this. So that's what happens. And when you hear, and you'll hear people on YouTube say this, they're like, oh my God, Berkshire Hathaway is selling more stuff and moving it to cash. It must mean that a recession is coming or that the market's about to crash big time. No, it doesn't. It just means that they're doing this. Boom. That's what they're doing. Warren Buffett and Berkshire Hathaway are just preparing for when this happens because they don't know when it's going to happen. Nobody does. And they're preparing. So when it does happen, when they're down in here, they're buying their favorite stocks at really good prices. And once they move out again, guess what they're doing? Cash, cash, cash. They're moving things into their cash position as they pull up. But as they keep doing it, right? If you think about it, you've got a little bit of cash here. You got a bit more cash here. You got more cash here. So it starts to make, people start to take notice. It's like, oh my God, look how big their cash position is. Well, here's the thing. If we go into a bear market here, well, that's how much cash they have. But, maybe we won't go into a bear market here. Maybe, for example, this bull market lasts a lot longer, which means that they'll have more room for cash, and it will get bigger, and it will get bigger, and it will get, holy banana bread, really big. It's the way the market works, and it's kind of the way smart investing works. So I'm at the point right now, like I am adding to my cash position every single month. And then when this happens, and I don't think, and keep in mind, I don't know, but I think, my best guess is that either towards the end of 2025 or early 2026, that's when this will happen. And this might take 2 years. Like that could be 2 years of time, before we recover. Or maybe it'll only be a year, or maybe it'll be 3 years. It's very rare that it goes beyond 3 years. But during that time, because I've been putting this away, I'm going to have some cash. I will tell you, in the last bear market, one of the things I heard, and I hear a lot of stuff on this channel, through all the people who are talking. One of the key things I heard a lot of is, gosh, I really wish I had money to buy some of these deals. I heard that a lot. And if you use a strategy like this, now keep in mind, if you're using a strategy like this, when it starts going down, you don't want to just, you don't right here, you don't want to say, oh, okay, I'm going to sell all of that and just buy everything. Because look at what you've missed. Generally, I will just I'll put myself into a DCA. So I'll DCA my way down because I don't know where this little change is going to happen, this pivot. And there could be false starts. So for example, it might come like this and then go back down further. So you don't know when it's going to begin. But if you're DCAing, you're getting a good mixture going down. And then when it does ramp up, hopefully you still get enough that you're DCAing up to here. And then you realize, you might still be DCAing here. And then you realize, oh, we're now in a bull market. We're heading back into a bull market. So then you would stop your DCAing and start parking your cash again, all the way up. And then when we do get to that next one, you're going to sell once again. You're going to, do your DCA as it goes down. Simple as that. Now, sometimes it's hard to have the mental fortitude to do it, but it is pretty simple. And that's how the big money makes, that's how they make more money. All right. JJ says, no retiring early. I'd get bored. Not working on something. Okay. Temperance Ministry says, how did you get into stocks and how did you learn to read balance sheets, etc.? That is very difficult. All right. How did I get into stocks? Honestly, most of my life, I completely ignored stocks. I was very much, when I finished university, I was, double major biology, chemistry. I went and worked testing water. So that was my first job at a university was testing water for things like biological oxygen demands, suspended solids. So I used to actually go to some solid waste sites to collect water from There's a bunch of drilled wells that I would collect off some of the water, some of the runoff. And basically, I was making sure that there weren't nasties getting into the environment. It was the most boring job I ever had. um, this was before you had a computer in your office. Quite literally, I would collect everything on Monday, set up all my experiments, take a few readings through the week, write up a report on Friday. And I used to talk to the municipal engineer, and I was like, "Well, what am I supposed to do? Is there stuff I should be doing?" And he's like, "Nah, bring books, do whatever you want." And it just if I felt so guilty sitting there reading a book while I was working. Um, it was just boring. I ended up leaving it for that reason, that it just bored me beyond. Now, if it was, of course, this was just before computers broke. Um, if I had had a computer and the internet and everything else, it would have been fantastic. I would have been absolutely okay with it. But yeah, so anyway, from there, I started doing management stuff and training and technology, um, all of that fun stuff. It wasn't really coming towards the pandemic. That's when I really started cracking down on investing. And also learning about it. Like for me, if I run into a topic and I want to learn about it, I'm going to put myself into overdrive. I learn really fast. It's kind of my superpower. If I have a superpower, it's that I can learn and adapt really, really fast. So, I started learning, and at that point, I was just like, I couldn't get over the fact that it kind of annoyed the banana bread right out of me that none of this stuff had been taught to me in high school. That I came out of high school not, well, I knew how to do my taxes only because I figured it out. But, nobody knew, a lot of people didn't know how to do their taxes. A lot of people didn't know anything about investing. A lot of people didn't even know what their TFSA was for. I mean, my mom thought it was just for holding money in it. She would put money in it and that was it. So a lot of people didn't really have an understanding. And as I learned, and I was just like, this is something people need to understand. This is something people need to know. Um, then as the pandemic hit and, I started watching, I had a lot more time on my hands. At that point, I was like, I kind of want to do this on YouTube, but, you know, I'm a little scared about doing it. It's like, come on. Nobody wants to see my old mug on YouTube. Why? Why would they? And that's the thing. You have to get over self-doubt and things like that. Cause it's a different thing. But the thing is, being older certainly has helped because I brought a lot of wisdom with me when I did finally start. Now I did it a little smart. I got involved with a couple other communities and, other creators in that field right away. That sort of helped give me more motivation to get started. And then I started and I was just like, okay, I've started, let's do it. My goal, learn, continue learning. Don't ever take my foot off the pedal when it comes to learning. And, just keep going and help as many people as I can along the way. And that's what I've kind of become my motto for the channel. That's one of the reasons, like, I don't know how many other channels will answer pretty much every question they get. I go out of my way to try to. Now, I know that I will get to a size where it's going to be really hard to do that, but I'll always still make that effort because it's very important to me. So yeah, I mean, sure, maybe I want to make this into a career. Like right now, I am in the red, and I'm okay with that. I'm in the red. It takes a long time before you start to actually make any kind of money on YouTube. I make a little bit from the AdSense, but I probably make just as much from your guys' supers and from the channel members. That's probably an equal amount to what I make from AdSense. So it takes a while to grow, and I'm okay with that. And, I've been putting my heart and soul into this for like 3 years, and I'm not going anywhere. I'm not going anywhere. I'm going to keep doing what I'm doing. And as people move along, and as I see and I watch the growth. I watch the growth in the people who are coming into the chat all the time. And for me, that's one of the biggest rewards is being able to watch that. I mean, yeah, of course, I want to make money as well, but that will come in time. Um, and it gets better every year. It gets a little bit better, which is fantastic. But anyway, yeah, I just went off on a big temperance. You sent me off on a big tangent, but all right. From one ministry to another, we got Reverend Ramirez. I heard in the news they argue whether Canada is in a recession or not, and also about this technical recession. What is that compared to a real recession? Okay, so a technical recession is basically we need to have two GDPs in a row, so quarterly GDPs that are in the negative. That denotes a technical recession. Now, what they're kind of arguing about is right now there's a statistic out there called a GDP per capita, and that has been it's been in the pooper for a while, and it has been in the negative. So in many ways, it's like we're in a recession without a recession being called. And that's kind of what people are arguing about. Like, are we kind of in a recession right now? I mean, people are feeling it. Unemployment is high. And even if you think about technical recession, what they're arguing is that if it weren't for the fact that immigration has been so high and that we've been pulling people in like crazy, we would have hit that technical recession numbers. So we would have had those couple of negative quarters of GDP. That's the argument, and that's what you're hearing in the news. So it boils down to, are we in a recession? Maybe. But it's not a technical recession. I don't think the government will let us get into a technical recession. Things could still get worse, absolutely. It's kind of where the economy is going. But this is the nice thing. As investors, we have another option. We have options to try to preserve our money. We have options to go defensive when it's time to go defensive. Because right now, this is the other thing that's really interesting, is when you look at the beginning of a recession, normally the market is not doing as good as it's doing now. So we kind of got the market on its own little trajectory, all-time highs, all of this fun stuff. So that's kind of keeping us out of a recession. Now, you can argue part of it has been that, the market for the longest time was propped up by technology. And now it's not so much. Now everything else is kind of caught up with it. But yeah, are we in a recession? Maybe. But the thing to do right now is they don't want to go into a technical recession, and they're going to do their best. The government will do their best to try to prevent it. But it could happen. It could very well happen. And keep in mind, a recession tends to be, it's healthy to have one every so often. You don't have to have them all the time, but it's part of the economic cycle. So we will eventually have a recession. We can't hold it off forever. But one of the interesting things, though, is typically in the past, typically we'll go into a bear market and then we'll also have a recession. But in the middle of the recession, normally the bear market then recovers, starts to move into a bull market. And the power of that bull market sometimes actually helps us get out of that recession. So that's very kind of an interesting thing. Anyway, I hope I answered that question. I'm going to try not to go off on, big, long, giant tangents for every questions. Otherwise, we'll be here till midnight. Nine says, yeah, I use that strat hoard cash in the bull market. Awesome. Yeah, I know that Nine does it. Nine's pretty smart. So just use dividends and interest to DCA into index funds. Nice. JJ says, my projected dividend distribution income moving forward is roughly about $7,000 per month, skewed heavily by Coney, Misty, Skewy, I guess, and YMAX, half of which is in my TFSA. All right. JJ says, my plan is to take about half of those distributions and add them to USSL and QQQL. Nice. Nine says, luckily, a family friend got me into investing when I was 16. Very good. Very good. Yeah, I think everyone, quite honestly, I think as soon as you're old enough to invest, you should be investing. Let's see. Bismarcky says you need to sell merchandise. Um, okay. All right. Let me see here. All right. Oh, I think I closed it, but I actually do have one thing for sale right now. The Trump mug. The Trump mug is one thing I have to say. I haven't yet added it to like created a merchandise section, but I have begun. I have begun. So there'll be more to come. There'll be more to come. Um, I don't know. Let me see here. Let me see if I can find it. I think. Oh, it's over on the Discord, guys. It's over on the Discord. All right. Let's. All right. Where did I put it? Did I put it on? Now I need. Oh, I might have actually added it to announcements. But let's see here. Here it is. Here it is. Right here. I know it says coming soon, but it is actually available. I mean, if you want to buy it, you can buy it. I'm gonna open this up. Yeah, let's visit the site. All right, here it is. Make dams great again mug. That's the first of many. Yeah, and it's also there's also a 15-ounce one. 15-ounce one is good because then you get a bit more coffee. But it is available. It is available. The link is over there. Here, I'll give you guys the link. I'll give you guys the link. Why not? If you really want this mug, you're more than welcome to check it out. All right. And 9 says, high school didn't teach potential or practical finance at all. Yeah, exactly. Now I did hear that Doug Ford is Rob Ford. He's not teaching anything. But Doug Ford, I heard that he did want some basic finance put into the Ontario school curriculum. So that is always a good thing. How do you feel about DIV long term? So diversified. Let's come back here. DIV, diversified royalty. DIV. Here we go. This is a little company that I like to throw. I like to throw my money into. Anytime I have some money left over, I'm like, yeah, I'll throw it into DIV because it's so cheap. It has been this cheap for a long time. Let's come back here to their 5-year. Their 5-year is flatlined. They flatlined for 5. Why is that flatlined? Okay. I do not know. Wow, there's some. Oh, there we go. There we go. All right, here we go. 5 years. This is a company that's not going to go up high. They're also going to stay pretty stable. Pretty much they range from about, when the economy is bad or they're doing bad, about 270 up to maybe 3, a little over 3. They tend to range in here quite a bit. But they have a nice little dividend. Yield is 8.388%. I mean, it's not much. You get 2.1 cents per share, but when the shares are only like $3, it's not too shabby. Now, they do have some good royalties. So they hold the royalties for Jack Astor's and let's see, Mr. Lube. Also, Air Miles. Air Miles perhaps isn't that a good one to have anymore, but they do hold a lot of good royalties. So, they have a steady cash. They have a very low, let me just show you guys here. You'll see debt-wise. Here we go. Actually, it's much higher than it used to be. They're sitting at a 91% debt-to-equity ratio. Normally with royalty companies, you'll see that much lower. A little higher than I like to see, but I still like the company. I think they have a nice dividend. As far as I know, I can't remember them ever missing it, and their dividend has been the same for like a long time. So 0.021. All right. Oh, they did actually raise it. All right. See, I didn't even realize they raised it. I just knew it was around 2 cents. So they actually did raise their dividend. All right. Yeah. So maybe once every couple of years, it looks like they raise their dividend a little bit. But they've been very, very active, even through the worst times. Like, this is back in the pandemic. Oh yeah, look at this. They cut it a little bit in the pandemic. There we go. They raised it, then they cut it, but they've been really, really consistent. So I still like this company. I still like it. It's a neat little one to throw my extra cents into. So, and I think right now I have like in the challenge, I think I've got like 93 or 95 shares of them. So, they add up pretty quickly. All right. Let's see. Reverend Ramirez says, I would buy a Mountain Finance logo fabric grocery bag. Okay. All right. I'll keep that in mind. Yeah, yeah, I think I'm trying to think. Like I've been using I think it's called Fourth Wall or something like that. Um, I'll see if they do grocery bags. I'll see if they do grocery bags. If they do one, Reverend Ramirez, I will. I'll get one made for you. I'll get one made. All right. JJ says, I'm really glad YouTube was a great teacher during the early pandemic. That's how I got into stocks and investing overall. My high school didn't teach me much of anything useful in adulthood. Yes, absolutely. Oh boy. Let's see. Except for their economics and accounting classes, which I was very interested in and did super well. The only problem, see, and this is the big problem, JJ, is like, yeah, my high school had economics, it had accounting, but if you were on the pre-academic track, they weren't part of that. They were in the non-academic track. So, there was just no exposure to anybody who was going to university or anybody in the sciences. So, so the div payout ratio, 124%, spooks me a bit. Yeah, it looks a little better. I think if you look at their, if you look at as a percentage of cash flow. So that's just, yeah, one of those things. I look at that and then I look at the cash flow and I'm like, fine, but they have been very reliable. But keep in mind, and this is what I will always say, Ian, I will always say this. If a company spooks you out, even though I may like it, but if they spook you out, just for the peace of mind, it doesn't hurt to find another company, to be honest. There's enough good companies out there that you can pick the ones you really like. And that's one of the beautiful things of investing. There's multiple ways to victory. Let's see. Temperance says, what do you do with your dividends? Do you always reinvest into the same stock or do you buy other stocks with your dividends? That's a really great question. I like to reinvest, not in the same stock. I basically let all my dividends fall into, so let's say with the 0 to 100K, I let all the dividends fall into that account, and that just becomes part of the money I'm going to spend each month. That way there. And the reason I do it that way is that I have what I call passive rebalancing. So that means, like, let's say, for example, like I love Canoe, but right now I've got enough Canoe. So I don't want to put, that $4 a month that right now that comes out of Canoe. I don't want to put that back into Canoe. So that would be better off to put in something that, I do want to increase my exposure to, or I do want to build up my position in. So I do it that way. Now, some people, and this also depends too, some people really like to put it back in the same asset, and there's nothing wrong with that. In some cases, now I don't know if we have anybody in Canada who does it, but you can do a drip. And hold on, before you guys say, wait a minute, Wealthsimple does dripping. But what I'm talking about is that there are some companies that will offer a drip through brokers where you'll get a discount if you drip back into it. So that way there, instead of, just getting, like, let's say if it drops $100 dividend, you wouldn't just get $100 worth of the stock, you get a tiny bit more. I know there are brokers in the US that do it. There's probably somebody in Canada that does it. Anybody who knows of any broker that does that, definitely let me know. But definitely something I would be interested, that I think would be very interesting for sure. All right. Jackie says, let's see, there's a finance math class, FBF3C, in high school. I taught it for 15 years. You should have enrolled. Oh, Jackie just hit a JJ across the knuckles with the ruler. This is great. I love it. Yep. JJ, you've been schooled. Let's see, JJ says it wasn't offered at my high school when I did it in 2016. You should have just changed high schools, JJ. Jackie still has you. Ian says, I bought EXE when it had an 8% dividend. Now I might sell to fund the TFSA and put what's left into DIV, or might go DIV and Enbridge. Oh, yeah. Nothing wrong with that. I mean, utilities right now are going to be doing well. I mean, they respond well to rate cuts as well. And I may very well be doing an Enbridge deep dive here. Let me take a look. I'm going to take a quick gander here and see if we have any more information here. Let's see. Yeah, right now, Enbridge is leading by 39%. So they have 39% of the vote. Brookfield Corporation has 30%. Then Alimentation Couche-Tard. And then comes Metro. Somebody actually, I don't know. I didn't actually get to see the comment. I saw it, but it disappeared because YouTube went and grabbed it. But somebody was correcting me on my pronunciation of Alimentation Couche-Tard. And I think it was because apparently I was putting an E on couche, and I wasn't pronouncing the E on tart. I don't know. But basically, because they said it, they said the word tard from couche-tard, and YouTube thought they might have been saying it from a different context that's not acceptable. And that's why YouTube grabbed it. YouTube will steal, if you ever have a comment that I don't reply to, chances are YouTube might have taken it. If you try to put, for example, if you put like a dot, like if you're trying to put enb.to, it will think you're trying to put in a web address, and it will probably get rid of it on me. So it's just an interesting thing. Okay, JJ is saying, all right, couche. All right, I got that part. And tar. Oh, tar. Instead of tard. Tar. Okay, there we go. No D. There we go. All right, now I know. JJ just schooled me. So it's almost like, well, you know what? It's like it comes around, right? Jackie schooled JJ. JJ schooled me. Love it. JJ says, I would have if I took it. I didn't think I would have continued on my current medicine higher education path. Prairie says, have you figured out when you are going to park your cash, or are you still just using, right now I'm still using cash. So I still have it in cash at the moment. So no, I haven't yet figured that out yet. If I'm going to move it, I have to really, I kind of want to look at things and see how things are going to react to the 50 basis point cut that we just had. Because, if any of these accounts end up better off at the end of it, that might be the one I move the cash to. But for now, it's sitting in cash. All right. Let's see. Prairie says, investor, have you figured out where you are going to park your cash? Or are you still using cash? Yeah, exactly. I'm still using cash right now. But as I said, I want to figure it out. JJ says Brompton's split is better than cash. Well, I'll have to take a look at that. I'll definitely have to take a look at that for sure. All right. Let's see. Taxes eligible dividends instead of interest. Oh, that's interesting. Well, it's in a TFSA, so I don't care about that. But for somebody wanting to hold cash outside of your TFSA, that's not a bad thing as well. I think, yeah, there's a whole bunch of other ones. I know Evolve has one as well. I want to take a look at theirs and a few others, but yeah, it's going to be pretty good. All right, guys. Holy banana bread. Has it been 2.5 hours already? These days, these streams go by fast. That's because there's so much fun. You guys are always rocking it and bringing the fun to the stream for sure. All right. I'm not going to leave while I'm little. Here we go. All right, guys. This has been fantastic. There will be another stream tomorrow for the financial blogmas, and also on Tuesday and on Wednesday. And of course, we have the market close on Wednesday as well. So yeah, it continues this month where you see me all the time, every day. It's fantastic. Fantastic for sure. Michael just threw in, do you think Whitecap will be more defensive in a possible downturn than other energy stocks? They did pretty good in the last one, to be honest. Yeah, maybe, maybe. Well, it's hard to say. When you look at some of the bigger energy stocks, for example, something like Torlamine, even through the bear market, they were giving extra dividends because you also have to realize too that a lot of times when the market downturns, um, the energy stocks don't necessarily have to. It really depends on what's happening with oil because they kind of have their own little thing going. So you have to keep that into consideration, I think, as well. All right, guys. So, hey, as the crow flies, I got supper downstairs. I'm gonna go have that. This has been another great stream. You guys rock. And I will see you guys on Wednesday. Until then, take care and have a fantastic evening. Bye, everybody.